Although Tesla shares have dominated the market this year, rising 87%, they have taken a break recently, falling about 21% from their recent high posted on July 18. Investors appear to be processing the latest financial results negatively, but many are confident that Tesla stock will reach 300 per share by the end of 2023. This would equate to 30% gain over the next 4 months or so in each of the first 2 quarters of 2023. Currently, Tesla stock is trading at $238.59 per share, less than $100 below the 300 price tag that many believe Tesla will reach within the year, with revenue of $23. 3 cents billion and $24.09 billion till 1 and Q2 respectively, Tesla was able to surpass Wall Street analysts' projections for the top line. Both statistics indicated year-over-year improvements of more than 20%, which is incredible growth for the leader in the EV sector. Additionally, Tesla shipped 8,890 vehicles in the most recent 2 quarters as opposed to 565,000 within the first half of 2022. However, there were some unfavorable details regarding the company's most recent margin, despite the company's recent mixed financial results. Investors were disappointed by Tesla's Q2 gross margin of 18.2%, which was significantly lower than it was during the same time last year. And the primary cause of this lower profitability in China is the constant price reductions Tesla has implemented to increase volume and increase its market share. The same thing is happening, and it looks like a fierce price war in the EV industry is currently underway, which could make it difficult for Tesla to increase profits in the future. However, a 30% increase in the stock between now and the end of the year doesn't seem like an irrational outcome. The 22% gain in Tesla shares over the last 10 years shows that massive upswings are common. In November 2021, the stock's closing split adjusted price hit an all-time high of just under $410. When Tesla reports its 3rd quarter financial results in October, there are a few possible catalysts that might increase the firm's stock and shareholder value. The company has the potential to outperform consensus analyst predictions once more. Moreover, the stock price could profit if margins begin to level off. During the company's most recent earnings call, Tesla CEO Elon Musk announced that the company will start shipping its much anticipated Cybertruck later this year. If this occurs, it might be a positive catalyst, but the opposite is also true for shareholders. Investors may be hoping that Tesla shares will reverse their recent trend and have a strong year end if it delays the start of Cybertruck deliveries once more. However, it doesn't seem to be as simple as that. In the near term, there's always a lot of uncertainty, but given the state of the economy, it seems like that uncertainty is particularly high right now. Consumer spending, unemployment, and the job market will be important factors influencing what the Fed does regardless of what happens with inflation. So investors shouldn't ignore the macro environment, fundamentally speaking. Tesla could crush it during the remainder of the year, but the stock could still perform poorly. Although there's no way to know for sure what will happen in the future, it's still possible that the stock will reach 300 by year's end. As a result, the best thing that Tesla shareholders can do is adopt a long-term mindset. As a result, both enthusiasts and investors are becoming sufficiently optimistic to believe that the stock will reach 300 before the year. And notably, the leading edge company stock nearly reached 300 in mid-July of this year, trading at 293.34 cents per share prior to Wall Street banks downgrading Tesla. While analysts have differing opinions about where to place Tesla stock going forward, the main trend of their price targets for growth stock CEO has been upward in recent weeks. Analysts have been impressed by Tesla's better than expected 2nd quarter deliveries and its overall resilience in the face of an uncertain macroeconomic environment. A few weeks ago, one analyst expressed his belief that Tesla would soar to 300 within the year. The production of automobiles is increasing faster than expected generally, and Tesla's manufacturing trends are no different. John Murphy, an analyst with Bank of America, recently raised his price targets for stocks in the auto industry. Specifically, he raised his price target for Tesla stock from 225 to 300. It should be noted that this occurred prior to banks downgrading Tesla, after the company reported an 83% year-over-year increase in 2nd quarter deliveries. Murphy praised the electric vehicle manufacturer's high volume operation, arguing that the auto industry supply has improved more than anticipated this year, increasing the value of automakers like Tesla. Tesla's production has significantly increased year over year, supporting robust second quarter deliveries of 466 140 vehicles. The company's quarterly production of 479 700 vehicles represents an 80% increase in the number of vehicles produced. The production of Tesla was a complete mess during the same period last year, and the company's factory in China experienced a major production halt during the first half of 2022 as the government of that nation continued its strict efforts to stop the spread COVID-19 challenges in the supply chain. This also resulted in higher costs as demand exceeded supply. Labs, lower industrial production, and supply were distributed across expensive fixed investments in capital. In the second quarter 2022 earnings call, Tesla CEO Elon Musk referred to the operating environment as supply chain hell, noting that the company's production had improved significantly sequentially. If demand stays strong, the nearly 480 vehicles produced in Q2 were up 9 from the first quarter of 2023. With its vehicle prices slashed by up to 20% earlier this year, Tesla has taken intentional steps to help drive sales growth in order to keep up with production. As a result, the company is now well positioned to meet its target of growing sales by roughly 50% year over year. Although Tesla has been able to expand its production capacity, it is unclear if demand will rise at the same rate as supply. Murphy has a high 300-month price objective for the company, indicating that he thinks demand and deliveries for Tesla will continue to rise nicely past year. The production output of Tesla's German gigafactory near Berlin has slowed to less than 4,000 units per week, according to a story published by Business Insider citing internal documents and anonymous sources. The production milestone of 5,000 units reached in March was a one-off, and Tesla has gradually lowered the production target of its Brandenburg facility to 4,350 cars per week in July and August, and even lower for the coming weeks. As previously revealed, Tesla's potential annual manufacturing output slightly increased, and as of the end of Q2, it stands at more than 2,025,000 units, which is 25,000 more than at the end of Q2. However, this may or may not change in Q3. The American electric vehicle company, Tesla, reportedly added a third shift and planned to add a fourth shift at Giga Berlin in April to double production. But 2 months later, Reuters reported that the Elon Musk-led company would cut Saturday shifts and hire fewer temporary workers. Tesla insisted that production was still on track to meet self-imposed targets. Tesla only assembled the Model Y electric crossover in Germany after reaching the production milestone of 5,000 units per week. All things considered, it is unclear if Tesla will reach $300 within the year, but with over 4 months left before the year ends, it is conceivable. And this is especially true given that the stock is currently trading at roughly $238.59, and Tesla will have reached $300. Be sure to subscribe for more updates. Drew, that the stock is currently trading at roughly $238.59, and Tesla will have reached $300. Be sure to subscribe for more updates.